Good morning. Good morning, everyone. Let me know if you can hear me. Thanks, William. Back on YouTube this week. All right. Welcome, everybody, to Monday, the 12th of May. And we're back on YouTube as our technical issues have been resolved. Hope everybody had a good weekend. Let's go take a look at what's going on here. So we're gap higher. There's Friday's high. There's tonight's low. We have a gap right here. And it's a little bit of news. So we have a change in business, right? So when you have a gap, when you open outside the previous day's range, that's what we call a material change. So something has changed with regards to the underlying. So business is not the same as it was on Friday. Trading gaps can be a bit of a problem. A lot of people are instructed that all gaps fill, so they automatically short a gap. Hey, Tim. Now, shorting a gap automatically gets you into a lot of trouble because if you look at the structure of tonight's trading, you'll see that we're one-time framing higher, which means every low is higher, and the market has not corrected inventory in any kind of significant fashion, and that's trend up. So when you have trend up, it's really, really difficult to short into that. When you have a move that goes higher, there's the front side of the move and the back side of the move. Okay? So, for example, if you were looking to short when it got to 73, most people start shorting here, adding to it here, getting stopped out here, and then blowing up their account there, and then the short works out. This is the front side. That's not to short into. The front side of the move, and I'm not sure if you guys know this, but the front side of the move is for large wholesalers to get rid of inventory, to sell. The back side of the move is when the market goes above a level or fails to go above the level. Then what you do is you short it and you put your stop at that level. So there's a business reason for the short. Now, what is the business reason for shorting the backside of the move? It's pretty simple. The sellers, right? Say if sellers have a position here and they're selling it all the way up. Well, eventually you run out of buyers. And when you run out of buyers, you got to put it on sale. And when you put it on sale, you have more than one seller, right? So those sellers start to compete and lower prices so they can get rid of their inventory, right? So they're going to sell it right back down to their cost basis, which is here, right? If they don't have to sell it to their cost base, they'll stop and the market will do this. So here's the thing. You don't want to be shorting the front side of the move. What you want to do is wait until the sellers start competing. And when they start competing, then you can put in a short sale. And there you will have an intelligent place to put your stop. Otherwise, if you have the front side of the move, there's no intelligent place to put your stop. Especially if you start shorting it too early, right? You need sellers to short a market. You can't short a market saying it's got to go lower, it's too high. That doesn't work. You have to be able to identify that sellers are competing and lowering price. Otherwise, there's no business reason for the trade. Okay? Ask any short seller, right? What is the business reason that you're taking that trade there? What is the business reason where your risk is? Your risk is, say I'm short here. If I go and short it at, say, 57.70, and I put my stop at 73, that means sellers are competing at 73, 72, 71. If I see the market starting offering at 71, 72, 73, and I'm short at 70, why would I still be short? Especially if it offers over 73, then I got to get out of the trade because the business reason for the trade no longer exists. There's no reason for me to be short, right? Very simple, right? So short the backside of the move, wait for a seller to show up, put your stop where the sellers are. If those sellers disappear, you've lost your backup. Do you guys understand that? I know it's Monday morning, and just try to make you understand why you should not be shorting the front side of the move. This is why short sellers always blow up their accounts. And then after they're short, right, the trade always works out. And they're like, oh, right, they're always early. But if you don't understand why you're early, right, if you don't understand why you're in a trade, you shouldn't be in a trade, right? Nobody ever tells you that, right? Every trade has a business reason. It's not that complex, right? It's either there's a lack of supply or there's too much supply. If there's a lack of supply, you go long. If there's too much supply, you go short. It's not rocket science. Execution is hard. Make the analysis simple so you can actually think under pressure, right? So here, for example, right? Let's go take a look at this market. For example, when the market came out and it dipped under here, if I was short 64, 63, and 64 and a half was my stop, if I noticed the market couldn't get down to this cost basis here at 62, I know I'm in trouble. And then it starts offering up, I'm going to get stopped out of the trade. I'm not going to hold on and reshort and add to it here, right? When the market runs out of supply, it will tell you. Don't be caught short when the market runs out of supply, right? Learn the front side of the move and the back side of the move, right? If you learn that and you actually think about that when you're in a trade, you're going to be much better off, right? You will have what they call situational awareness, right? Situational awareness is being aware of your surroundings, being aware of what the heck's going on, right? Something that you always want to work on, okay? Any questions? Do you guys understand what I'm talking about? It's about the simplest way I can explain it. The other thing I was talking about earlier in this, and I put it in the room, I was talking about candle patterns, when you get this barcode pattern like this is pretty much untradeable. That's untradeable, right? The market tonight is a little harder to trade, especially if you're a scalper, right? So if you're a scalper, right, you want nice clean movements, right? So how do you trade this if you can't scalp it? Because there's really no movement. The only way to trade this is to trade it by building small positions. So for example, if you were looking to go long, right? And this is difficult because you got to hold these positions for a while. So I wouldn't have traded, right? But if I was looking at this, I would just leave that alone, right? If the time period's smaller, you can always kind of build a little long and put your stop under here, right? And as the market goes up, you sell into it. You can, Raj, but it's a good observation, Raj. It's it's and what Raj is talking about is that 45-degree angle that Resnicek and Dalton and these guys talk about. When you look at the market profile and you go like this, but the problem with this 45-degree angle stuff is don't start looking for it everywhere. Okay? Yeah. You could see also we've got a gap, right? You've got a gap and the offer is moving higher, the lows are getting higher, right? Don't start looking for 45-degree angles everywhere. It's one of those things they kind of talked about in market profile, but I haven't really used, right? Because I've kind of gotten away from trading off the profile. I use the profile to give me certain amounts of information. There's about 3 or 4 things that we look at in market profile that we can actually really use. One is poor highs, poor lows. The other is where's the inventory and where the stops are, and single prints, right? Those are that's the meat of market profile. There is a lot of information you can get out of it, but what is the information you can actually use to make money? And we always have to be aware of that because there's so much information. Somebody was showing me options pricing bid-ask spreads, and I was like, how the hell do you use that to actually take a trade? Like, how do you incorporate that into an execution strategy? Right? You want to know where is my stop? What am I going to do? I'm going long because, there's no one selling, right? Simple, right? So if you're going long, right, why am I going long? Well, because nobody has to sell underneath 64. So when it looks below 64 and fails, I go long 65, 65 half. I put my stop at the bottom of that candle, and my first target is 68 and a half. Okay? So the business reason for the trade, I'm buying 65 because nobody needs to sell under 64 half. Now, if the market starts offering under 64 half, 64 quarter, 64, then I know that they have to sell under 64. So me owning inventory at 65 makes no business sense. This will keep you out of all this stupid, undisciplined crap like FOMO and revenge trading and all of this stuff, which are just bad excuses for really, really undisciplined business behavior, right? That's what these words are. FOMO, tilt, revenge trading. Those are all just really bad excuses for undisciplined behavior in business, right? You ever hear an accountant doing a FOMO audit, right? Here we go, putting in a new override high. So had I bought, say, 10 contracts at 66, right? You sell a few at 68, 68 and a half, sell a few at 70, sell a few at 70 half, sell a couple every 2 ticks, 3 ticks. Make sure you get out of that position. Now, why would you do that? Well, you don't know. You're in uncharted territory. So you don't know what the order flow is going to be like. So just in case this is a false breakout and it breaks up over 68 and comes back in, and you were long at 66, wouldn't you rather sell your inventory at 70 than sell it for break even? Trades should make sense, right? There should be a business reason why you're selling, right? The Treasury Secretary is holding a news conference around the London Open? That's 3 in the morning. Or is he in Europe? Must be in Europe. Thanks for the heads up. Oh, Mike, there you are. What's going on, Mike? Ah, Switzerland. Hey, Howard. How's it going? Okay, good heads up. Right. So if he's going to be talking, I'm not going to be trading until he's done talking. That's just me. It's just kind of creeping higher, Moran, so they can get rid of their inventory that they took in on Friday and at lower levels tonight. Oh, goodness. Mm. Yeah. Ah, slow, slow, slow. So right now, because we put in a new high, if you were to go out and draw a line right where this old high is, see? Check something out. People who were using that old high as a stop, if you were short under 69 and if you were short here, a lot of larger traders would use that high as a stop. That's why you have responsive buying when you go up and you come back down to it. You'll notice how it's going back and forth over this level. See? Watch how it goes back and forth. That is what they call responsive buying, something you should look out for. And responsive buying will occur where they took a previous high or a previous low, right? Or even responsive selling. So if you break the previous day low and then you get back up into the previous day low, there'll be responsive selling. For the same reason, because there'll be inventory above it. Notice how price came back down. What is that, 68 and 3/4? Notice how it comes down to 68 and 3/4, but it's just kind of, it won't break it because think of 68 and a half as a glass door, and the sellers see buyers lining up. And when the sellers see buyers lining up, they raise price. Right? It's just smart business, right? Wouldn't you? If you were trying to sell something and you owned it at 64 and you saw people willing to pay 69, wouldn't you try and get them to pay 70, 70 half, right? I don't know, Raj. I wasn't awake when Globex opened. It opened on a gap, just went up and then came all the way back down, but it couldn't fill the gap because the previous day's high is, where's the previous day high? That's not it. It's all the way down here at 57.10. There's a fairly sizable gap. Right? So once those shorts, once they see that there's enough for sale, they'll lower their buy orders, excuse me, right? So if I'm a short seller and I'm trying to buy 68, right? Remember that glass door works both ways. If they see sellers coming to rush the door, they're going to drop their bids to try and get better prices. If they see the sellers moving away, they'll move their bids higher. That's why you get chop in certain areas. That's a negotiation process that you're not privy to because nobody ever talks about it. There's a business reason for chop. There's a business reason for trend, right? Still have 6 minutes before London opens. Definitely. Hey, Travis, that's exactly it, right? You create demand by, a gap up is demand, a gap down is supply, right? Now, here's the thing, right? You create demand because you've got people trapped short from Friday, right? Anybody who shorted this market and wanted to hold it over the weekend, we know people who do that, not having the best of times right now, right? And right now it's not really tradable. And I would really, if I knew that a Treasury Secretary was speaking in 4 minutes, 5 minutes, I probably would not want to jump into a position. What I'm looking for is I'm looking to see if they can move this point of control from 57.60 up to 67 and get some distribution. You need about another 200 contracts, right? And then we'll move the value area up. And what that means is distribution, right? Now, what that means, you can't really trade off of that, but it gives you an idea of what's happening because after a good distribution, maybe there'll be a sale, right? Might watch that right there. right? Let's see if we can turn that into the point of control. If we can't, right, maybe we don't have enough buying and we've got to put it on sale, right? That's why I don't use these POCs to trade. I just use them for information. And it's really not that important, right? If you have good distribution, that's nice. There's a decent amount of buying, right? But you still have to pay attention to the candles, right? Because you can't trade market profile like this. There's no point of reference. Like say you go long at 67, well, your stop is going to be 62. That's a big stop, right? You want to do trades where it looks below a level and comes back up over it. And when it comes back up over it, then you can take the trade and you've got a place to put your stop, right? And then you've got a place to sell into. And it's clear. This is not clear. Anybody have any questions? No? Exactly, Travis. This is exactly what I mean. Don't worry about the buyers, right? Worry about the sellers. The sellers are going to set the price, right? The sellers will worry about the buyers. They will set the price according to what kind of buying is coming in. So if prices are going up, that means the sellers see buyers and are raising price. If prices are going down, it means sellers have to compete for the buyers and will lower price, right? Does that make sense? I mean, it's pretty simple, right? Right now, the sellers don't have to put it on sale, so be careful shorting it. Simple, practical, right? There's no fancy math. There's nothing. You pick a level. If the market can't get under that level when it gets there, it means they don't have to sell underneath it, right? Wouldn't you rather sell something at $8 than at 4? I would. But nobody ever talks like that. So people are always confused about what's going on when it's actually very simple. This is a wholesale dominated business. Hey, Terzi, what's going on? Okay. It's like watching paint dry this morning. Oh, hello. Jeez. And that's why we have a thin order book, and that's why you don't short the front end of moves. Dear Lord. These knuckleheads are running this market like a clown car. Looking for 58.01 and a quarter, ladies and gentlemen. Oh, goodness. Went right through it. 58.25? Any takers? Jeez. Well, what did we hit? 58.26. I don't know what he said. That was it was like 1 minute. Hi, the market jumped. What I'll do now is because it's just ridiculous right now. So what I'm gonna do, sorry. Oh my goodness. I'm sorry. This is just totally ridiculous. So we've got our levels here. We're over 58.25. That's a big level. Let's see if we stay above it. And just so you know, we took out the swing highs from that 58.10. There's a swing high up here close to 58.40. Oh my goodness. Um, yeah, there you go, Charlie. Yeah, we're still on the front side, my friend. Definitely on the front side. I guess the market really liked it when he said hi. So just let the large traders and the suckers deal with this right now. Right? The order book is really thin. That's why you get these huge, just ridiculous moves. Right? Somebody says something, and next thing you know. So I had my balance and everything. Now what I'm going to do is I'm going to wait and I'm going to draw a balance zone up here because this will be distribution balance. And I don't trade this kind of stuff, and this is why I told people not to be in a trade at 8 o'clock UK time. Has anybody got the news? Just out of curiosity. No, Raj, you can't. Really try and use that. They're just single prints. Try and use that gap word, right? As less as you know, the less you use the word gap, right? Remember, Raj, gap is when you open outside of the previous day's range, right? So what you should be doing now, Raj, is waiting and focusing on a balance up here for distribution. Right, brother? Thanks, Jerry. So why is it 90 days? Huh. Just kind of get to know you kind of thing? See how it's doing a little balance here? Another pump in 90 days. Right. This isn't written in stone yet. I'm just going to wait until. Now, what I'm doing is I'm looking to see whether or not we we've got a high and a low, and when we look below that low, do we go right back to that high? That's what that balance is. I'm looking for two-sided trade now. Right? I want to see two-sided trade. Oh. He's talking now? Thanks, Raj. So this is a. I'm just watching to see whether we could get a balance out of that. 58.25 1/4 is a big zone for me. The bottom of that zone is 55.84. So if we stay above 58 1/4, that's significant. That's fairly significant. Let's just go take a look at the daily here. We've got that 200 around 58.68. We're coming up. Pretty interesting stuff. Not much. I'm very curious about 58.40. Do we get resistance when we come up to 58.40? Because that's our inventory above it. I'm curious. Right? On NQ, 5 points away from it now. We're above. We're above 20,050, 515. So let's see. Let's see. Let's see. Yeah, this is the top of my zone. If we take out 58.40, the next level up is 58.60 3/4. And we just went through 58.40 like a hot knife through butter. So 60 3/4 is the next level up. Lord. This is what happens when you get an entire market short underneath you. I was actually thinking we were going to see some selling here. So when you get everybody short underneath, that creates nice rocket fuel for a move up. Very difficult to trade it. Did they increase margin rates? I haven't even looked at my email. I'm surprised they didn't increase margin. If you had a gun to your head short and you're shorting this, use 41 as a stop. You'll notice I don't even have my trading software, my trading account open. I just have this and it's on Sim. We accept over 58.40. Be careful shorting it. There's a seller at 40. And what you're doing is you're shorting the backfill, right? So had you been shorting 40, your stop would be above it, right? And this is the backside of the move now. This is a backfill. There's the front side, there's the back side. Now, where would you cover? Kind of hard. I'd be looking for this area. I'd front run 32. If I was short, I'd be front running 32. If I was short 39, 38, 37, I'd be paying myself here. Let's see if 28 and a half works. I'm curious, just curious. Don't be afraid to sit and watch a market. You know, there's a difference between smart money and dumb money. Smart money sits and watches, right? Watches where the buying is, where the selling is, so they can make intelligent decisions. Dumb money, dumb money just trades like a chicken with their head cut off, right? They don't watch anything, they don't observe anything, they just jump in. Don't be dumb money, be smart money. So do you guys see how the balance thing is working, guys in the room? Ladies, gentlemen? No? Yes? No? I know it's Monday. That's why I said if you were short under 40, you should be covering 32. And hey, you got lucky if you could get the 29s, right? And then it did a look below and fail of 28 half, and it's rotating back up. Look for sellers at 40 again, right? Works pretty nicely. It's pretty simple. Nice and simple, right? No drama. Yeah, now it's not drama, it's distribution. This was the drama, Raj, this big 1 minute candle, right? So what was going on, Raj? Right? This is the inventory. This is the highway. This is the store, right? You load up the truck with the inventory, you drive it down the highway, you go to the store, and you get rid of it up here, right? That's all it is. Just distribution now, right? So we leave the drama to other traders, and then we like to trade these rotations, right? This is a nice rotation. 28 half, 41, 15, 28. Those are big rotations. You could even mark the middle of the zone and you can see, you know, acquisition of inventory underneath this level and distribution above it. So you buy under 35, you sell over 35. When you have to put it on sale, you sell it under 35 all the way down to 28. Right? Simple stuff. It's not rocket science. I'm here watching and learning. Can I trade with two iPhones each connected to a screen or a monitor? I wouldn't recommend it. I mean, it depends how, if you're swing trading or position trading, yeah, you can trade using a phone. But if you're day trading or scalping, you want to be plugged in. You want a PC plugged into a wall so you have fast internet with no glitches. That's just me. Well, Travis, right? Remember, look below, fail, right? So right now there's nothing for you to do, right? Just remember, go from one color to another, back up into the other color, right? Yeah, and having inventory below us, but you also have to remember, Travis, that it's also, they just changed the macroeconomics before everyone woke up, right? They did a macroeconomic change at 3:30 in the morning New York time. So give the market some time to react. Don't take anything for granted. Okay? So the look below and fail will work when inventory is all underneath us, right? But just don't get sloppy, right? That's all. Just be careful. Ooh, excuse me. I don't like trading on wireless. I don't know how to pronounce your name. Um, Now, Travel, let's see if we rotate up off those 29s up to 35. Oh, it's going to be an interesting day. Oh, man. You know how they say, may you live in interesting times. Yeah, big change for the week. Oh, boy. So that big news cycle was, yeah, COVID was a great margin robbery, right? They margined everybody out who didn't pay for their stock in cash, and this was the same. Anybody who didn't pay for their position in cash, they got margined out. What was our all-time low on this market? Down here under 48.78, all the way up to 58.40. That's 1,000 points. Jeez, that's a lot of movement in the S&P. NQ's the same. Really, really have. Gosh, Unbelievable. This move hurt a lot of people. First it hurt all the longs, and then it hurt the shorts. So, all right, let's see if we can get back over 58.40. Because if we trapped enough shorts on these lower moves, we'll be able to pop this over 41. There's going to be a lot of people offside, Raj. There's going to be a lot of people offside. And now you know you've been with me since the beginning when I started the room, right? So I think it's a reoccurring theme, right? If you lock up all the inventory, right? If you warehouse all the paper, if you warehouse all the large positions, you can move price at will with very little volume. Yeah. Yeah, there was a decent crew in the beginning when we started the room. And oh, by the way, while we're waiting for this thing to decide whether it goes over 40 or not, folks, we changed the name of our room from Microefutures to the Trading Syndicate. We always have some sort of a deal going on. I invite you to come check out the room. We've got a promo code here. It's at the bottom of your screen. We've got a very, very good community that allows traders to learn no matter what their level of skill. If you don't know what you're doing at all, come join us. If you are a seasoned trader and you're looking to um, sharpen your edge, if you want to lose less money, keep more money, come visit us. We work with different funding firms like Take Profit and Apex. A little bit of advertising there, right? And also, for those of you who are interested, who need a little bit more of a hand, I do offer lifetime one-on-one coaching. And how that works is you take an 8-week course over and over again, but also you get to work with me one-on-one. And it's basically like the experience you'd get if you worked at a brokerage firm. I trade right next to you. We work together every day if you want, every other day. As much as you need, your schedule permits. And it's a one-time fee, and I'm with you for life. Yeah, since 2021, I've really streamlined the teaching. You know, I've streamlined the teaching. I've had to learn how to teach, and my whole goal is to be able to teach people in the most simple way that they can actually understand it and use it to make money. Because so much trading education is just, it's nonsensical, and you can actually never use it to make any money. Where do you put the trade? Why am I taking this trade? Okay, where do I get in? Where's my risk on this trade that makes sense? Right? What is the business reason for the trade? What's the business reason for my risk going here? Right? And then what should I expect? given the market at this time, what should I expect for a target, right? It's great to have a 30-point target, but if the market's got a 10-point range, you're never going to get there, right? We charge 40 a month for the room. And I invite anybody who's interested in the coaching, just reach out to me on X. I'm vwaptrader1. Give me a DM, or you can email me at vwaptrader1 at gmail.com, and I'll do a private session with you if you're serious about coaching. And it's a one-time fee. So, I charge you once and then you never get charged again. Like, we'll be working together for 5 years, 8 years, however long you want. All right, let's see if we can get up over 52 now. Yeah, it's taken me 4 years to really like drill down on the teaching, and I'm still trying to improve it. The problem with trading up here is the order flow is unpredictable, right? It's 3:30 in the morning in New York. The order flow is really unpredictable. Obviously, we moved up, and this is what happens. When you move a market higher, and then you do these sort of like washing machine back and forth, every time it dips down here, people get short, right? And that causes that big move up. This is why you never want to short the front end of a move. You can short little backfills, right? But always remember to cover. Don't get too greedy. Because the whole front end of the move, it'll do this. And you can short in here, but don't position short until it does this and then comes in. And remember, there's not a lot of sellers around at 3:30 in the morning. So, top of this zone is 58.60. Hey, Chris, I have no idea what max gamma is, but that's a cool looking chart. That's cool. I've never seen that before. How you doing this morning? The most important thing is wait for the sellers to show themselves. And don't be at any rush because we're up 172 points now. So the prospect of this thing just falling apart is it's a little difficult, okay? So be smart, right? Don't do anything crazy. All right? I thank everyone for being with us this morning. We'll see you at RTH. It's good to be back on YouTube. Thank God my technology's working. And we'll see you soon. Come check us out at the Trading Syndicate. I'm JJ. Hey, thanks, William. Have a wonderful, wonderful morning. Please be safe out there. Okay? And we'll see you at 9 a.m. Eastern Time, which is 2 p.m. UK time. Okay? Thanks, everyone. Bye for now.